What's up, guys? Mr. J here again. It's been a while. I made a video. I'm so excited to be making one now. So guys, today in this video we're talking about smart money concepts. I'll be looking at three simple smart money concepts that you should know will help you. That will help you when it comes to trading in line with the smart money concept. Knowing and understanding these three concepts will increase your win rate when you're trading with the smart money concepts, right? So the first one here is the market direction, and then the second one is liquidity, understanding liquidity, where liquidity lies and how to make the best out of it. And then the next one we're talking about is the supply and demand. And then I also added the fair value gap, which is the FVG here. We'll also talk about it a little bit, right? So the market direction, liquidity, supply and demand, and then we'll talk about the fair value gap a little bit, right? So these concepts are they are the core when it comes to trading smart money concepts, and understanding them correctly and how to use them effectively will improve your win ratio, will skyrocket your win ratio literally, right? So that being said, let's just dive straight to it. So I made a little bit of note here. Yeah, the number one is the market direction. So I said market direction. Here we want to identify who is in control, right? The buyers or the sellers, because we aim to trade in line with the direction of the market. We want to be trading in line with the direction of the market. So it's very, very important that we understand who is in control per time, right? Who is in control per time, right? So for example, I did a sketch over here, which I will explain. Let me explain this sketch so you will be on the same page, right? So yeah, so this is a low over here. We have a low that breaks the structure, right? And now this low leaves behind a demand zone. Any low that breaks the structure to the upside leaves behind a demand zone, right? Whenever price breaks a structure to the upside, it leaves behind a demand zone, and this market comes back to mitigate that demand zone, right, to target what the external high, which is the break of structure, right? So as you can see over here, we have a demand zone over here. This low is a demand zone. Market breaks above this higher high over here, right, to create a break of structure. Right now, once we had this break of structure, what happened? The market came back again to mitigate this demand zone, right? You can see we're in a bullish market. Market is just going upward. Second thing happening again here, we had a demand zone over here. This low breaks above this structure to create a BOS, which is a break of structure, right? And now once that happens, the market comes back again to mitigate this demand zone over here, right? So as long as this market the price is above this demand zone, we are just going to be looking for buying opportunities on our demand zone. Whenever price comes to mitigate those demand levels, we want to be looking for ways to just buy. As long as the market remains above, the price remains above our demand zones, we're looking for scenarios to just be buying and buying them, because the market will always come back to mitigate those demand zones. So we are just looking for ways to trade in line with that particular trend, right? Now here are all demand zones, but now right now currently from this my chart now, we can say the buyers are in control. But when this changes, because you all know as part time market might change, sometimes the buyers will be in control and then the sellers will also be in control. So right now, as you can see, market started breaking structures to the downside over here, and then it finally created what a change of character. So now we can see the sellers have taken control over this market, right? So you can see this change of character over here. This simply means that the buyers are no longer in control of this market, right? And that the sellers have entered this market. So this zone over here is a supply zone. This zone over here is a supply zone, and this zone will likely push price downwards, right? So now market might come back to this, any of these supply zones. We have one supply zone here, another one above here, another one above here. Market can pick any of them and then just continue selling. So as you can see clearly now, the market has changed the direction from the buying to the selling. So you have to understand who is in control per time. So currently now we are looking for sales. We are no longer looking for buys on this particular market because we have changed from buying to selling. We have changed from the buying to selling. So right now, if this market breaks below this low now, right, we'll be looking for market to come back again to this supply zone here, and then just keep selling, right? Now we are looking for sales, no longer buys, right? So in a nutshell, it's important to understand who is in control of the market per time. When you come to the market, outline your levels, draw your levels, try to understand this market, is it buying or is it selling? Because your aim is to trade in line with that particular structure per time, right? So I hope this is clear. The next one we'll be talking about here is liquidity, right? Liquidity. So I wrote something here. I said liquidity is an area on the chart where many stop losses or pending orders are placed, right? So it's an area on the chart where there are so many stop losses or pending orders. People have placed their pending orders at those particular levels, and the market is attracted to those levels to take out those stop losses before moving in the particular direction, right? So we have basically two types of liquidity, which is the buy side liquidity and the sell side liquidity. The sell side liquidity are liquidity resting above a particular, the sell side liquidity are liquidity resting below a particular zone. Like as you can see over here, we have a sell side liquidity resting below here, right? So this is below, while the buy side is above, right? The buy side is above. Let me just quickly write this down. Liquidity is resting above a zone. Yeah, so here is the buy side liquidity. We have them resting above the zone, and when we have the sell side liquidity resting below, right, the zone, right? So this market is attracted or is looking out to take out this zone, to take out the liquidity resting below or above this level, right? So now from this example that I sketched over here, so I see markets came to this zone and it has tapped about 3 times on this particular level. The first one here, the second one here, the third one here. So we can see this is a strong support level, right? Now, as we all know, as we are taught when we started trading newly, we want to be buying from support zones, right? And selling from resistant levels. That is the normal thing we have all been taught when we started trading price action, at that initial stage, right? So now you agree with me that many people will be wanting to buy from this level and they will put their stop losses below this zone, right? Now, the market, like I told you, the market is after those stop losses, after those pending orders. People will place their pending orders at this level and put their stop losses below, right? The market should come back and tap on those pending orders and then continue moving in the upward direction. But now this market will likely come, like I said, liquidity hunts. It will likely come, tap on your pending orders, but it will also come back to sweep your liquidity, take out your liquidity first, your stop losses, before it now finally, starts going in that direction. So the best thing to do in this kind of scenario is to wait for market to take out the liquidity, and then you now look for scenarios to enter and trade in line with the current market trend, right? So the best thing to do is to wait, don't rush in, allow the market to take out the stop losses first before you now look for scenarios, to jump in and trade in line with the current market trend, right? So I really hope this is this has been handled very, very well. And then the next one we'll be looking out for, which is the last one we'll be looking out for, is supply and demand. Supply and demand. So let me just quickly shoot this a little. Yeah. So supply and demand. So yeah, I wrote something down. I said demand zones is an area where buyers previously entered the market and push the price higher, right? While supply zones are levels where sellers have entered the market and pushed the price lower, just vice versa, right? So as you can see over here, we have a demand market. The buyers enter the market from this demand, they push the price upwards, right? We have another demand over here, they push the price upwards. So all these levels are demand zones, right? All these levels are demand zones. Now, I said demand zones act as potential support to price whenever price comes back to them. So now, as you can see from this my example here, whenever price came back to a demand zone, it reacted and it pushed it up to the upside. Whenever price came back to a demand zone, it reacted and it pushed it up to the upside. So you have to understand that these demand levels would serve as, strong areas. They can serve as support and resistance, support levels to push price or to make price to react whenever price comes back to them, right? Vice versa, same thing with the supply zone. Yeah. A supply zone can act as a major resistance whenever price comes back to it. So here, this example I wrote over here, we have a supply zone over here, right? And price came back to this supply zone, and then as you can see, this supply zone pushed price lower. This zone now served as as a resistance to price, and it pushed price lower, right? So this is just basically what the demand and the supply entails, right? Now, how do we know the right demand and supply, right? How do we know the right demand and supply? Now, how to marking out the right demand and supply zones. So here's where I will now talk about the fair value gap, which is very, very important, because the fair value gap validates our supply or demand zones. If we don't see a fair value gap or impulsive move on our supply and demand levels, that demand or supply is not valid. So the fair value gap is actually very, very important because it validates our trade. So it's very, very important you understand what a fair value gap means, right? Okay, so yeah, I said marking the right demand and supply zones, right? I said for a demand, in a demand zone, the last bearish candle must be followed by an impulsive move to the upside, right? That leaves behind what? A fair value gap. While a supply is the last bullish candle followed by an impulsive move downwards that leaves behind what? A fair value gap, right? So let me just quickly explain that and show you how you can know a valid supply and a valid demand zone, right? So in a valid supply zone, as you can see, let's say this right here is this example over here is a supply example, right? So this is our break of structure over here, right? And as you can see, we had what? An impulsive move. We have a push downwards, right? And this push left behind what? A supply zone, right? Now, how do we know this supply zone is valid? We want to see after the, like I said earlier, I said it's the last candle, right? The last candle, right? See, is it for a supply, the last bullish candle. So let's say we have a bullish candle over here, right? Which is our supply zone. And then we have a massive pull downwards, right? Now, is an impulsive move, right? And now, inside that impulsive move, we'll have what we call a fair value gap, right? Our fair value gap. If you don't know what a fair value gap is, you can watch some of the videos on the channel. I think I've talked about fair value gaps a lot. or you can go and research about fair value gaps, right? So once we have that fair value gap here, this validates our trade, right? So what we want to look out for now is for the market, yes, to come back into that fair value gap, mitigate that fair value gap, and then tap into our supply zone, and then we now sell to the downside, right? So this same thing also goes for in the buying in the demand zone. Let me give us an example of the demand zone. I didn't write that down, so I didn't give any example. So let me just give an example of demand zone. So right, so this is a demand zone over here, right? And then we have a push to the upside, right? And then another push to the upside, right? So now this is our demand zone. We have our last bearish candle over here. Now that bearish candle leaves behind what? An impulsive move, right? Which is our fair value gap, which validates our demand zone. In this case, our demand zone, right? And now what we're saying is that this is demand zone. We want to see market what? Come back, of course, to mitigate that demand zone, then tap into our to mitigate that fair value gap, tap into our demand zone, and then we want to be what? Buying to continue the trend, right? So guys, I really hope you were able to understand this. If you're still struggling, you can watch the video over and over again until you understand. If you have any questions, you can reach out to me. The link is in the bio of this video. Reach out to me, text me on Telegram, and then come with your problems. I'll see how to help you out. So please don't forget to like, subscribe to this channel. I'll be posting more videos that will help you, become better at trading. So thank you all for watching. See you guys in the next video. Yeah, peace.